in Nigeria. Please stop losing money on VAT. Simply do what we're going to show you now. Yes, friend, please stop losing money on VAT. Understand exactly how VAT works. You are losing money on VAT because you don't understand how exactly VAT works. First, whether you and or your business are vatable or exempted, how VAT is calculated, charged, paid, collected, balanced, or remitted. You do not know this and you do not know that. That is why you are losing money on VAT, and you can stop it today after watching this video. This compass is to educate you on everything that you need to know about VAT so that you will stop losing money and start saving money on VAT. Remember that we told you that each compass is deeply enriched so that everything that you need to know about each tax subject is comprehensively included in each compass so that you do not need to oscillate or swing between chapters or sections of the Tax Act searching for some relevant provisions of a particular tax subject, which are spread across the various tax acts. And here's the good news. You do not need to bother any longer because Tax Corp has done that for you. One of the distinguishing key features of Tax Corp videos is that Tax Corp has combed the entire new Nigerian Tax Acts and comprehensively plucked the provisions of the Tax Act that relate to each tax subject and assembled them in each tax subject. In this way, you don't need to be moving to and fro the tax acts searching for one provision or the other. Consequently, in this compass, everything that you need to know about value-added tax is here. In this video, among others, you are going to know the golden rule of tax freedom. You're going to know the fundamental meaning of value-added tax. You're going to know the general rule of vatability of supplies or transactions. You're going to know as well expressly stated vatable supplies, transactions, and persons, the basis of VAT and the rates of VAT. You will get to know the nature and characteristics of VAT, the mechanism of operationality of VAT, the general rule for charging, paying, collecting, and remitting VAT, the key distinction between VAT exempt supplies and zero-rated supplies, VAT offenses and penalties, and of course, some tips on how you can stop losing money on VAT. So what do you do? Simple. Just pay attention to the end of this video. Like it, subscribe, hit the notification button and share so that as we release more videos, you'll get them automatically, hot and fresh. Drop your comments if you have anyone to make in the comment section. So what are you going to learn in this compass? You're going to learn the following. The golden rule of tax freedom, the fundamental meaning of VAT, the golden rule of vatability or taxability of supplies or transactions. You're going to learn supplies, transactions, and persons subject to VAT, the basis of value-added tax, the sole tax authority for VAT, the rates of VAT, nature and characteristics of VAT, detailed operational mechanism of VAT, general rule of VAT operationality, the general rule for collecting and remitting VAT, the key distinction between VAT exempt and zero-rated suppliers, VAT exempt suppliers, zero-rated suppliers, other tax incentives on VAT, incentives, VAT credits, claims and refunds, Nigeria Revenue Service fiscalization policy and your compliance, basic requirements for effective compliance of VAT, VAT offenses and penalties and how you can avoid them, some tips for complying effectively with value-added tax mechanism, list of the 22 interdependent compasses about tax corp and the authors. Now, the golden rule of tax freedom. Dear friend, do you really want to be free from tax wahala? No disturbance of your sleep by a taxman, no knocking at your door by a tax lady, no receipt of long queries by your business from a tax controller, no receipt of unsolicited reminders or threats by your company, no blocking of your bank accounts by the tax chairman, no debiting of your bank account at the directive of a tax authority, no barging into you or your business by law enforcement officers, No forceful entry into your business premises by tax officers and law enforcement officers, no threat of imprisonment by a law court, no selling of your business or its assets without a court order, either the tax has become final and conclusive by the Nigerian Revenue Service. Well, friend, if your answer to the above compound question is a capital yes, then obey the golden rule of tax freedom and you ask, what is this golden rule of tax freedom? And we tell you that it is the three C's. And you ask, what is the three C's? And we say, comply, comply, and comply. Fundamental meaning of value-added tax. The fundamental meaning of value-added tax, as the name suggests, is a tax which is imposed by a constituted authority, usually the government, on the value added on taxable supplies, that's goods and services, at each stage of the product value chain, which comprises production, acquisition, purchase, distribution, or performance process, and may or may not be charged, collected or remitted to the tax authority by the supplier of the product or value adder. The key point here is that value added tax, as the name suggests, is charged on the value added on a product along its value chain. Meaning, if at any stage of the value chain no value is added on the product, there will be no VAT. How to charge VAT correctly? You have the invoice amount by the supplier, for instance, 100 million, and you have the VAT at 7.5%, uh, which gives you 7.5 million. Then you have the invoice plus VAT total, which gives you 107,500,000 naira. The golden rule of vatability or taxability of suppliers or transaction. Not every suppliers or transaction is vatable. The golden rule of vatability or taxability of supplies or transaction is that any transaction for sale of goods or performance of a service for or a consideration is vatable, except where there are exemptions. I repeat, the golden rule of vatability or taxability of supplies or transaction is that any transaction for sale of goods or performance of a service for a consideration is vatable, except where there are exemptions. This golden rule of vatability and taxability of supplies is strongly backed by two sections of the Nigerian Tax Act 2025. Section 145 of the Nigerian Tax Act states inter alia that VAT shall be imposed on all taxable supplies in Nigeria. Section 202 of the Nigerian Tax Act 2025 states inter alia that taxable supplies means any transaction for sale of goods or performance of a service for a consideration. So once you sell a product or goods or perform a service for a consideration, that transaction is vatable and you should therefore charge, collect, balance, and remit VAT to Nigerian Revenue Service, except of course where that transaction is specifically exempted from VAT. If you do not do that, you will face multiple penalties. And supplies, transactions, and persons subject to VAT. We have seen the golden rule of vatability or taxability of supplies or transactions, which states that any transaction for sale of goods or performance of service for a consideration is vatable, except where there are exemptions. Please note that the wide coverage of this golden rule of vatability or taxability of supplies is very important. It covers every transaction except supplies expressly exempted by the Tax Act or excluded by the golden rule of vatability. Consequently, taxable supplies include business activities or financial transactions undertaken by taxable and non-taxable persons, including individuals and corporates, public authorities, associations, clubs, non-governmental organizations, charitable, religious, educational organizations, and so on. In addition to those expressly exempted by the tax law, the following business and non-business activities are not taxable activities: wages and salaries of workers, hobbies, private transactions such as occasional sale of household or domestic articles, furnishing, personal effects, etc. The basis of value-added tax. Tax has a base. So what is this base? Is exactly value addition is the measure or the value which you added on the ultimate value of a product. That is the value before the addition of new value. The basis of VAT is value addition. No value added, no VAT. So what exactly is value addition and how does it arise? Value addition is the measure or the value which you added on the penultimate value of a product. That is the value before the addition of new value. A quick example, if you bought a generator for 5 million naira and sold it for 7 million naira, the increment of 2 million is the measure or the value that you added. Meaning, if you do not add value, nobody will pay you additional 2 million naira. Please know that value addition comes or arises in different forms, shapes, and ways. For instance, special and unique packaging of products, including effigy, are part of value addition, for they increase the value or people's perception of product or services. And the sole authority responsible for administering and collecting VAT. In Nigeria, there's only one tax authority responsible for administering and collecting VAT across the nation, and that authority is Nigerian Revenue Service. In addition, in Nigeria, VAT is a national or federation tax and not a federal or state or local government tax. Consequently, it is administered and collected on behalf of the entire Nigerian people by the Nigerian Revenue Service and distributed among the constituents of the federation. The rates of tax. There are two rates of VAT, and they are standard VAT rate for taxable supplies, which is 7.5%, and incentive VAT rate for zero-rated supplies, which is 0%. Now, please pay attention here. The nature and characteristics of VAT, how you know VAT and how you apply VAT. VAT is charged only on value added. Please note that VAT is charged only on value added. No value added, no VAT. VAT has a dual nature. There is input VAT and there is output VAT. When you purchase a product, the VAT you pay is called input VAT, purchase VAT if you like. And when you sell a product or offer a service, the VAT you collect is called output VAT or sales VAT if you like. VAT is an ad valorem tax. It is calculated as a percentage of your turnover or output. The higher your turnover, the higher your output VAT. VAT is calculated as a percentage of turnover or output, but charged on the value you added. Meaning that you can have output VAT, but if your input VAT is the same as your output VAT, confirming that you did not add any value, you will not remit any VAT to Nigerian Revenue Service because you did not add any value. VAT is an indirect tax and not a direct tax, except the final payer and consumer. Other payers of VAT do not bear the burden of tax, as they shift the burden of VAT to the next purchaser of the goods or services. VAT is a consumption-based tax. Consequently, you only pay VAT when you buy a taxable supply and finally consume the product or service. Meaning, if you do not buy a taxable supply, you will not pay VAT. But if you buy a Brazilian hair or fix eyelashes, my sister, you will pay VAT. But if you buy Panadol, you will not pay VAT because drugs are VAT exempt. VAT is a multi-stage tax. It is charged at each stage of the value chain, which comprises production, acquisition, sale, distribution, or performance of service. VAT is a monthly return tax. You file VAT return monthly and pay VAT monthly. VAT is a standalone tax. It is not related to or set off against any other tax, except with respect to the final consumer. The VAT you pay, called input VAT, is an advanced tax and not a final tax, as you can set it off against the VAT you collect, called the output VAT. The purchaser does not necessarily bear the burden of VAT. The final consumer does. In Nigeria, VAT is a national or federation tax and not a federal, state, or local government tax. Consequently, it is administered and collected by the Nigerian Revenue Service and disputed among the constituents of the Federation. Detailed operational mechanism of VAT. VAT works on these 9 steps. Supplier of goods or services issues invoice with their VAT invoice. Supplier of goods or services adds VAT amount to their sale or service amount. Purchaser of goods or services purchases goods or services for resale and pays VAT, called input VAT, to the supplier of the goods or services. Purchaser of goods or services, now a supplier, supplies goods or services to other purchasers. Supplier of goods or services issues invoice with a VAT invoice. Supplier of goods or services adds VAT amount to their sale or service amount. At the end of each month, supplier of goods or services calculates and balances their output VAT against their input VAT. And please watch this. Where output VAT exceeds input VAT, the supplier remits the excess output VAT, called VAT payable, to the Nigerian Revenue Service. And where conversely, input VAT exceeds output VAT, called VAT refundable, the supplier can either carry it forward or request refund from Nigerian Revenue Service. Now, the general rule of operationality of VAT, please you get to know this. The general rule of VAT operationality is that monthly input VAT is set off against output VAT to determine VAT payable or VAT refundable. And where it is VAT payable, the taxable person remits the VAT payable to the Nigerian Revenue Service. And where it is VAT refundable, the taxable person either carries forward the VAT refundable to subsequent months or request for refund, and should do all this on or before the 21st day of the subsequent month. The general rule for collecting and remitting VAT. The general rule for collecting and remitting VAT is that supplier of goods or services, that is the value adder, is the person who is statutorily responsible for charging, collecting, and remitting VAT to the tax authority, which in Nigeria is Nigerian Revenue Service. However, there are exceptions to the general rule in the Tax Act to the extent that the supplier of goods or services, that is the value adder, may not be the person responsible for charging, collecting, or remitting VAT to Nigerian Revenue Service. The Tax Act provides for some other persons to perform any of the roles and also empowers Nigerian Revenue Service to appoint some other persons it deemed fit and appropriate. For instance, the Nigerian Tax Act empowers government and their ministry, department, and agencies to collect and remit VAT to Nigerian Revenue Service, other than the supplier of the good or services. The key distinction between VAT exempt suppliers and zero-rated VAT suppliers. A VAT exempt supply is a supply that is within the scope of the VAT law, but no VAT obligation, no VAT wahala, no input VAT, no output VAT, no charging, no collecting, no paying, no remitting of VAT. Consequently, a taxable person who paid input VAT cannot claim input VAT credit or a VAT refund. For instance, if you buy Cerilac, a baby food or land or building at renewed Hope Estate in Abuja or Lekki in Lagos, nobody should ask you to pay VAT because you are with VAT exempt suppliers. On the other hand, a zero-rated VAT supply is a supply which is also within the scope of the VAT law, but with VAT obligation. Just very small VAT obligation, very small VAT wahala. There is input VAT, but no output VAT. You pay input VAT, but you don't collect output VAT. The small VAT wahala is that you will charge, collect, and remit VAT from customers, but will do this. Check this. You will do this at 0%. On the other hand, you pay input VAT at 7.5% to your suppliers. And when that happens, you'll be entitled to a VAT credit or refund for the input VAT you had paid. VAT exempt suppliers. The following suppliers are exempt from VAT: oil and gas exports, crude petroleum oil, and feed gas for all processed gas, goods purchased for use in humanitarian donor funded projects, baby products, locally manufactured sanitary towels, pads, or tampons for women, military hardware, arms, ammunition, and locally manufactured uniforms, shared passenger road transport service, purchase, hire, rental, or lease of equipment for agricultural purposes such as tractors, plows, supplies consumed by the approved entity, by an approved entity in the export processing zones or free trade zones, provided that the supplies are consumed on its approved activity. Goods or services supplied to a diplomatic mission, diplomat or person recognized under the Diplomatic Immunities and Privileges Act. Plays and performances conducted by educational institutions are part of learning. Land or building, including interest in land or building, that's real estate, there's no VAT there. Money or securities, including interest on money or securities. Government licenses, assistive devices and disability related products like hearing aids, wheelchair, and so on. Now, the zero rated VAT suppliers. The following taxable supplies are charged to VAT at the rate of 0%. Basic food items, all medical and pharmaceutical products, including medicinal herbal products, educational books and materials, fertilizers, locally purchased, locally produced agricultural chemicals, locally produced veterinary medicine, locally produced animal feeds, live cattle, that's nama, goats, sheep, and poultry, chicken, and so on, agricultural seeds and seedlings, electricity generated by generation companies, we call GENCOs, and supplied to the National Grid or Nigerian Bulk Electricity Trading Company, MBET, electricity transmitted by Transmission Company of Nigeria, TCN, to electricity distribution companies, DISCOs. All these are zero-rated VAT supplies. Medical services, school fees at all levels, tuition relating to nursery, primary, secondary, tertiary education, they are all zero-rated supplies. Exported goods, excluding oil and gas. Exported services, exported incorporeal real property, medical equipment, electric vehicles, electric vehicle parts, semi-knockdown units for the assembly of electric vehicles. Patent incentives on VAT. Small businesses of annual gross turnover of 100 million, less than 250 million of total fixed assets are exempt from VAT operation. Small businesses comprise small companies and small non-companies. So, whilst a small company can be a small business cannot be a small company because a small business is higher than a small company. Please, this distinction is important so you know where you belong. Though Nigerian Tax and Administration Act 2025 specifically mentions small businesses, but by definition of small companies by NTA 2025, small companies are also exempt from VAT operation as follows: exempt from filing monthly VAT returns and exempt from charging, collecting, paying, or remitting VAT. But they have to register for tax and also file tax returns. Also file tax returns annually. Items on which VAT is suspended or delayed for now: petroleum products, renewable energy equipment, compressed natural gas (CNG), liquefied, liquefied petroleum gas (LPG), and other gaseous hydrocarbons. Incentives, VAT credits, claims, and refunds. Except the input VAT paid by the final consumer. Input VAT is an advance tax which you can set off against your output VAT, carry forward to subsequent months, or request refund from the Nigerian Revenue Service. Consequently, The following tax incentives are provided by the Tax Act on payment of VAT. Monthly, you balance off output VAT against input VAT, and if output VAT is higher than the input VAT, you remit the excess VAT called VAT payable to the Nigerian Revenue Service on or before the 21st day of the subsequent month. On the other hand, if the output VAT is lower than the input VAT, you have a deficit called VAT refundable, which is a VAT credit and which you can either carry forward to the subsequent months or request refund from Nigerian Revenue Service. Similarly, you can now recoup the input VAT which you paid on any property, plant, or equipment. Lastly, you can now recoup the input VAT which you paid on any expense. Nigerian Revenue Service fiscalization policy and how to comply. The Tax Act provides that every taxable person making a taxable supply shall implement the fiscalization policy deployed by the service in accordance with Nigerian Tax Administration Act. The fiscalization system may include fiscal equipment consisting of electronic devices, software solutions, or a communication system involving a secured network or any such combination of the components for electronic invoicing and data transfer as the service may prescribe or deploy. The fiscalization system is nothing but a collection of fiscal gadgets, electronic devices, software solutions, and or communication systems, which the Nigerian Revenue Service connects to your electronic sales system or devices so as to make your invoicing or billing automatic, transparent, online, and real-time for better record keeping, accountability, financial and tax reporting. In this way, you gradually have to migrate from manual to electronic invoice, what they call e-invoicing. Basic requirements for effective compliance with the operation of VAT. The basic requirements for effective compliance with the operation of VAT are: 1. Sales VAT invoices, which are properly designed, sequentially numbered, contains the minimum information required by the Tax Act and properly issued. Please, you got to know this. Second, deployment and domestication of the fiscalization policy. Third, purchase VAT invoices, which are properly designed, sequentially numbered, contains the minimum information required by the Tax Act and properly issued. Clear, comprehensive, and accurate records you must keep. Monthly VAT returns you must complete and file. Without these basic requirements, you have no problem with VAT. Let me repeat. Without this basic requirement, you will have problem with VAT. So it's important, please let me repeat, it's important that these basic requirements that you have them and comply. Your invoice must be properly designed, please. It must be sequentially numbered for Nigerian Revenue Service to accept your invoice going forward. VAT offenses and penalties, and you can avoid. VAT offenses include the following offenses. First is failure to register for VAT and tax and obtain a tax ID. If you don't register for tax and VAT and obtain a tax ID, you have offended the VAT rules and regulation. Second, failure to file monthly VAT returns. Third, failure to charge and collect VAT on vatable suppliers. Failure to pay and remit VAT on vatable suppliers. Failure to keep comprehensive and accurate records. Failure to furnish required information. Failure to deploy the fiscalization policy and devices. Failure to use proper VAT invoices for sales and billings. Failure to state tax ID on your business documents, invoices, receipts, and so on, your letterheads. You have to state your tax ID. Issuance of incorrect or falsified records, documents, and information. The penalties of any of these offenses could be huge. They could be huge, they could be large, comprising financial penalties and terms of imprisonment. Just obey the 3 C's of the golden rule, then you don't have a problem. Some tips for complying effectively with VAT. Please pay attention here. First, know your VAT law well. Know your VAT status. You may or may not be liable to VAT. Keep a comprehensive register of all VAT compliances. Register for VAT timely and correctly. Charge all chargeables, collect all collectibles, pay all payables, balance all balanceable, remit all remittable. Issue compliant VAT invoice, not just any invoice, but compliant VAT invoice. Please know that. Know that very well. Comply with the fiscalization policy. Deploy fiscalization electronic devices where applicable and issue electronic invoices. Keep comprehensive and accurate record of all your VAT transactions. Balance input and output VAT monthly. Accurately complete and timely submit VAT return forms monthly on or before 25th day of the subsequent month. Remit VAT payable monthly or seek refund or credit for VAT refundable monthly on or before 25th day of the subsequent month. Contact Tax Club to assist you with your VAT and other compliances. Very, very important. Here you have the list of the 22 interdependent compasses. And as we always tell you, go through them, and if there's any tax subject that is bothering you or you want to deal with, just select it and go to our YouTube channel, Task Up, and you will see your answers to that particular tax subject. And should you desire us to deal with any particular issue, please tell us, reach us through any of the contact channels you have, including dropping your comments in the comment section and using our different contact channels to contact us. Then lastly, I tell you a little bit about TaskUp. TaskUp is a Nigerian tax consultancy firm which specializes in tax matters. Prince Chidi, FCA, FCTI, MBA, is the principal consultant. Prince Chidi is a licensed fellow of the Institute of Chartered Accountants of Nigeria, ICAN, and the Chartered Institute of Taxation of Nigeria, CITN. TaxCorp and Prince Chidi have provided tax services to numerous individuals and corporate bodies in both the public and private sectors, locally and internationally, since 1990. That's over 3 decades now. The beneficiaries include the Nigerian Revenue Service, is formerly called the Federal Inland Revenue Service, Revenue Mobilization, Allocation and Fiscal Commission, RAMFAC, State Internal Revenue Services, including Lagos State, Abia, Anambra, Kano, and so many other ones, and also the Federal Capital Territory Internal Revenue Service, and many private companies and individuals. Distinguished ladies and gentlemen, here you have heard about how you can stop losing money on VAT. So if there are any questions, any clarification that you desire, please drop them in our comment section or contact us through any of our contact channels. Thank you.